Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, let's start this show by giving a bit of a recap of how the key market or stock market indices have performed since the last show. Now, since the last show, the Nasdaq has fallen about 3.3%. The Emerging Market Broad Index, a broad measure, is down around about 2%. The All World Index is down around about 1%. The DAX is pretty flat, 0.1% up. The Dow Jones, which is very interesting, is up about 0.5% in the last week. It's been hitting new all-time highs, and the FTSE 100 is up around about 1.12%. Now, last time I talked about wanting or needing a catalyst for markets to either kick higher or break lower. We didn't quite get a catalyst that made a decisive move either way in markets, higher or breaking down lower. But what we did get is we got the US Treasury Secretary, Janet Yellen, talk about interest rates would need to probably go up in order to stop the economy overheating. Now, that took the market by surprise. Now, last week I talked about the reflation trade wasn't dead yet. And, well, obviously, Janet Yellen's comments suddenly sparked a resurgence in the reflation trade. And what that meant is technology stocks took a hit. This is a pattern that we've seen over recent weeks and months, where as soon as there's a hint that inflation could get out of control, which would require the US Federal Reserve to start to increase interest rates, we start to see certain market moves. The big one we tend to see are technology stocks start to tumble. So that's the NASDAQ 100, the tech-heavy NASDAQ usually tumbles. And we saw that pattern this week. On the flip side, you see things like financials do well because higher interest rates are good for banks and their profit line. And the energy stocks have also been doing quite well, and so have commodities more widely, because that's part of that inflationary story. So if you look at XLE or XLF, so go and Google those three letters, they are ETFs that the XLF ETF tracks the financial stocks in the US. That is up about 2.6% in the last week. If you look at XLE, it's up about 3.15%. Obviously, energy stocks doing well as part of this overall reflation story explains why the FTSE 100 has done so well, because there's a lot of exposure to energy in the FTSE 100. So you can see we've had the reflation trade come back with a roar this week, which explains why the Dow Jones has hit a new all-time high while the Nasdaq has stumbled. So this reflation trade is going to keep rumbling. And of course, last week I spoke about how there are some investment banks who are thinking we're about to see another leg higher in this reflation trade, perhaps something that's bigger than what we've seen even in the year to date. So that will be interesting and something to watch. Also, what is quite interesting this week is Janet Yellen was very quick to then try and sort of pour water on the flames of the fire that she'd created by her comments. And it's the fact that people like Janet Yellen, who have a huge impact on the US economy and the market movements, are so quick to try and rectify any damage done to the market, that just shows you how much this market is manipulated and how much, in this case, the US Treasury, but also the US Federal Reserve, are watching what goes on in markets. Because on the day that Janet Yellen made those comments, we saw the NASDAQ fall about 2.5%, the NASDAQ 100 I'm talking about, in a single day. It has rebounded slightly and has continued to wobble for the rest of the week. But on a single day, we saw that slide while other parts of the market, like financials, like energy, actually started to outperform and were in positive territory. So this is a market which the Federal Reserve are watching closely. So it begs the question, will the Federal Reserve really let the market collapse? Now, for 80/20 investor members, I've been doing some technical analysis work this week and have published an article which looks at the technical analysis for the S&P 500, the FTSE 100, the Japanese stock market, the Nikkei 225, and also look at the pound versus the dollar exchange rate, because obviously the value of the pound has a big influence on our investment portfolios in the UK. And one of the things we'll see is that there is still a definite uptrend, particularly in US stocks. So if you look at the S&P 500, there is a definite rising support line, which the market's been bouncing along. We do get occasional pullbacks, but we're still in an uptrend, a channel which the market is breaking towards new highs. Now, the S&P 500 is near 4,200. So I'll give you an inkling of some of that research that I published for 80/20 investor members. Keep an eye on the upside for 4,200 on the S&P 500. It's a level that we want to break. 4,200 has been a sort of a resistance line. If we can get above that, then that can open the door to perhaps 4,300, maybe higher. If we go over to the UK, the FTSE 100, we've broken back above the 7,000 level. We've broken above it a couple of times and then pulled back. 7,000 is obviously a key round number. It is psychologically important. People do invest, and big round numbers do have an impact on behavior of investors. So we can continue to push towards that. But I think the big one we've got to keep an eye on is 7,100. Once we break above there, we can start to almost put to bed a lot of what happened as a result of the COVID-19 pandemic. Because don't forget, UK stocks have lagged the US stock market since the pandemic, going back to March 2020. Now, there are signs in other stock markets that perhaps we are getting to a turning point. In Japanese stocks, there's some early signs of weakness. We have to see if that plays out or whether the uptrend resumes. So there are some things in the background. Breadth has weakened somewhat, particularly in technology stocks. I think the uptrend we've seen in other wider indices like the S&P 500 aren't being replicated as much in the NASDAQ 100. We've had a pullback. They've been bouncing off of some key support levels. We've got to see if the NASDAQ 100 and other technology stocks can start to break higher again, or whether growth stocks are finally going to start to break down, and as the reflation trade gathers another leg of momentum. Now, if we look at the pound versus the dollar, now that exchange rate is obviously important for UK investors, because if you have overseas holdings, particularly in US assets, then that impacts the returns that you see once they're converted back into pounds from dollars. Well, we're at a level where the pound-dollar exchange rate is pretty static. It's been bouncing between about 138 to 139, a bit lower than 138 on occasion, which means that we've seen a bit of stability, something we've not seen for quite a long time in that exchange rate, particularly since Brexit. So for UK investors, we're not seeing that volatility in currencies as yet. On the upside, there's still quite a bit of work to do if we're going to break the recent high that was around about $1.42. But on the downside, there's plenty of support for the pound against the dollar on the downside. So it is looking less likely that we're going to break lower on the pound versus the dollar exchange rate in the short term, at least, particularly as we're seeing more weakness in the US dollar anyway, partly because of central bank monetary easing in the US. And of course, we're seeing a lot of government US fiscal support, which is also putting downward pressure on the dollar. So overall, it's still a positive picture for equities. Bond markets seem to be finding their footing. The yields have stopped rising. We're around about 1.6 on the 10-year US Treasury. So we're having a bit of stability in bond markets. Equity markets are still rising, which is obviously good news for equity investors. And overall earnings in this earnings season have been positive. And the COVID-19 story has taken a slight back foot in the last week. So overall, it's been quite positive for investors. We'll have to see what happens in the days and weeks ahead. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email. Damien@moneytothemasses.com is the email address. Money to the Masses with the number 2 is the Twitter handle. You can find us on Instagram, Facebook, and of course, don't forget to subscribe to our YouTube channel.